learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, this is insane, man. What is this? What is happening right now? Are we really breaking through more? We set another new low today. Even Tepper covered his short, bro. Today was a big pump fake, but really? Are we really breaking the lows? I mean, does this chart not look scary, man? This is 2018. We said this at the beginning of the week. If it starts to break, I don't want to see this, but man, this is ugly. This was ugly. Tomorrow is about to be crazy. So, ladies and gentlemen, I hope you are locked and loaded. I hope you've been able to learn through all of this. Keep your composure. Keep enough money for the next move. And overall, just even keeping a little bit of the long-term vision there. But it's about to get crazier tomorrow. So, I hope you're ready. I'm going to go over what's going to happen. If you don't know, it is going to be the CPI. But now it gets a little more interesting because this CPI has a couple of implications. So I got some pretty pictures. We have a breakdown that we're going to go over. I'm going to tell you the most important metrics you need to be watching. And if you don't know, it comes out tomorrow at 5:30. So sorry, you can't make a play on it right now, but right at market open in the next couple of hours, it usually gets insane. And I mean, there's going to be a lot of pump fakes, man. I got good news and bad news and a little bit light on the good news. So we're going to go over that. We're going to talk about those main metrics, and then we're going to talk about what happened at the last CPIs and really every other CPI this year, and then we are going to go over the plays. But right now, man, even as far as the plays are concerned, again, none of this is a recommendation, but I hope you guys are seeing it. It is a very difficult options market, and I'm telling you, a lot of trades will become clearer once something smooth out. So unless you want to get in the middle of the volatility and you got that ability, or you're willing to take the risk, just be cautious and control the but. Someone came at me for going $20, bro. I was wearing small good decisions. Yeah, 20. I'll take 20 all day, baby. Okay, but literally, you could go small, control your budget. And again, people were asking, like, how do people blow up and do this? Like, you've heard of Tiger Global and all of that. It's just like, you got to put a lot of money in to lose a lot of money. So just don't forget that. I think that's good to start. But I got a couple plays, nothing too crazy besides that. We'll talk about it. I even got a weird update here for energy. I'm kind of excited, a little nervous to share it with you, but we're going to see what happens. But as far as today now, this is why I'm just like, what is going on? This morning, we actually started up very good. And if you don't know David Tepper, I mean, again, some of y'all don't like what he does with the Carolina Panthers, but I like him when it comes to stock picks, or even just like anytime he's came out. He usually, I mean, when he says it's down, it's down. When he says it's up, it's up. That's like the elementary way. I like the guy. He's good. He's a billionaire. You don't really hear about him too much. But this morning, he came in and said that he is covering his Nasdaq short, and he does not believe it's going to stay below like 12,000 for too long. So we were a little bit bullish. Even Goldman Sachs, they came out with the note. They said they're bullish on the market and that they're saying, well, this is just technicals and all this, and people are overreacting. Even JP Morgan Kalanovich yesterday, he said, buy the dip. It's been like, he keeps saying buy the dip, okay? But still, point is, we woke up very, very excited this morning, or there was a little bit of optimism, and even then, it sold off and we hit a new low. But what's crazy, we didn't close red. Literally, the Nasdaq closed up 1%. That's why I'm like, it probably didn't feel like that. And like we said, this is a new volatility that you are experiencing, but that's pretty much all that happened. Biden came on, talked about inflation. Wasn't anything too new. Even towards the end of the day, you got to hear from Psaki and even Elon Musk, but nothing really drove the market. It was all natural. We did hold up on VWAP for a little bit, and I'm sure you guys probably noticed that today. We closed right below it, so that's good to see. I think people are waiting for tomorrow, and now what is going to happen tomorrow? Why is it so important? So I have my own expectation, and I'm going to share that with you after we go over this, of pretty much whether or not I'm a contrarian or whatever it's going to be. But now, why is tomorrow so important? It is the CPI, the inflation report. Literally, the reason why people are reacting to the Fed is because the Fed has to react to inflation. So an inflation report and inflation data, that is going to be key. Now, why is it important? Especially on this meeting, because last meeting, people thought that was going to be the peak of inflation. And now a lot of people believe that is going to be true. But if you remember, I showed you guys this. Here was the contradicting part about the CPI last time. So this is the month over month. And I want you to keep focus on this because this is one of the big factors for tomorrow. But this showed up on month over month or year over year. The solid line is the headline CPI. That is the headline number that comes out. That is all of these factors, energy, fuel, all of that. And then the dotted line, that is core CPI. That is excluding food and energy. So remember, this was the paradox at the last CPI, and it was simply headline inflation was going up, core was going down. It's like it's wishboning. You know, they're breaking apart. It is a crossroads. So not only do people expect last meeting to be the top of inflation pretty much for the year or for a good amount of time, you also started to watch core come down. So this is why it's important tomorrow, because if that number comes in higher than last month, it's going to be awful. If you see the trend reverse in core, it's going to be hard to defend any other, oh yeah, inflation's getting better, all of that. So these are the two metrics we got to be watching. And now the third one here, month over month. It's like we said, a lot of the year over year expectations, it is solidified, meaning it could be wrong, but a lot of people do believe that it's going to come in line. Even myself included, I do believe it will come in line. Why? Because we saw a lot of inflation pressures the last 2 months, but think about the last couple months here. I mean, things have just stayed elevated, but it hasn't gotten worse. And that's where I'm thinking, yeah, maybe it did calm down. But now this is the important part. It's hard to raise the year over year because you're dealing with some difficult comps from last year. But now the month over month, this is what everyone's going to be looking at. Everybody is going to be looking at the month over month to see, okay, last time it was only 0.02, but if the month over month accelerates rapidly while the year over year declining is going down, it doesn't matter. That is negative. People are not going to like that. And then if you see the trend reverse and core starts going up and month over month actually starts rocketing, that will be bad. However, if year over year is down and month over month actually declines and we see core drop even more, that will probably be extremely bullish, or extremely just because we've been really negative, okay? Gosh, but that could help there on the upside. And now the only other part, or the final part, because that's going to be a lot to look at, and we're going to see, and don't get it twisted, there is going to be a lot of digestion and ups and downs. But now the final thing you got to be watching for tomorrow, it is going to be the average hourly wages. So with the CPI, we get to see a little bit more about wages and income. If that goes up a lot, and now given the last earnings and people worried about demand, that could have a negative impact, or at the very least, people will be using that to fit it into their narrative to defend bullish, bearish, whatever they want. So those are the main things. Now let's talk about what happened last time. So here's your pretty Roblox picture. You could see these are the last 4 CPIs that we have gotten all year. January, February, March, April. Yes, and now we're about to get wait, is this going to be the April one? I think so. No, this is going to be May. So your 5th one right there. But pretty much January, you could see here. Actually, no. We got to go back a little bit. This is where we should start a little bit earlier. One, green line is a positive average response. The middle, the white one, that is just normal response. And red is if it's an average negative response. I say average, it's all within one standard deviation. Here's the bad news. Every CPI for the last 12 months, and even now, if you take a look at this whole year of 2022, it on average ends up negative. So 6 hours after the release, you could expect the market to be down just under 0.5%. So that's the bad news. Even a good response produces I think just under 0.25% on the upside. And you can see here, we've only had one response there in March that ended up pretty much break even after 6 hours. So that's the bad part here, because now it's wait a minute, a lot of these CPIs have been pretty bearish. I know a lot of people, including myself, want this one to be a good one or think it can be, but if you take a look, I don't know, let's see what history shows. It's not looking too good. So last time now, this is where it gets interesting. And if you're going to take away anything from this video beyond what you need to look for tomorrow, but to really just solidify this, you're gonna get a lot of pops and drops. If the last couple weeks hasn't warmed you up to this, it's gonna get worse. I'm telling you, the CPIs have been crazy, and the last two, literally in April and then also in February, it was pretty nuts. And why? Because last meeting, we were actually up 0.5% within an hour. That means right after it came out, even though inflation hit that record, we rocketed. I'm sure you remember this. And then by the end of the day, it was our worst CPI that we have seen in probably, I think, 40 years, like reaction to the market, and we ended up down over 1%, and then the next few days kept even going down. Same thing happened in February. We got the report, we rocketed up to 0.75% within like the first hour. By the end of the day, we were down 1%, and then even there in where was that, April, January, actually all of them pretty much, since they ended up negative, all of them except for March, they started off green, then they ended up either going down and bouncing up and staying neutral, or really just selling off pretty hard. And then in March, just 2 months ago, that one was just a pure sell-off, and then by the end of the day, it actually bounced up. So we have a lot to digest tomorrow. Again, anything could happen. And now a lot of people asking me, what do I think that's going to happen? So what I said at the beginning of the week, maybe I'm just trying to be an optimist. Maybe I'm being hopeful, but I think it's going to be good. Or at the very least, my logic is like, I don't really have to take too big of an opinion. It's just more so this. If the CPI is good and the market could take that as good, that will be the catalyst that could get us out of the gutter. That's it. If there's going to be any catalyst, it's going to be either somebody buying something big, somebody coming in with a crazy deal, but more likely a catalyst like this or the Fed. I think that's going to be the thing that could help, get us a little bit of optimism back, if anything. But doesn't mean it has to happen that way. History looks a little bit grim, but I do believe that the inflation is going to come in lower. Now, hopefully you're seeing it. I've given you the breakdown. Depending on what the data is in the morning, we could pivot our interpretation. So nothing is final, but this is where I'm saying I think it could end up being positive. I'm going to be waiting and looking for that, but depending on what that report says tomorrow with the month over month, looking at the core and the non-core and all these different factors, I think we're going to get a better idea, and then we could go from there. So hopefully that helps you out as far as the plays. I only made 2 today. I thought it was 1, but there was 2. I did 1. It was a Kohl's June play. It's a little bit out of the money. It's actually way out the money. It's a 75 call, but why I say a little bit, because the deal they got is around like 68, 70 bucks. And now that's why I bought it. They've been going back and forth with this deal stuff last couple weeks. It really got knocked down. So I think there might be volatility. I grabbed 2 of those contracts at 15 cents, kept it super small with $30, and then I did another $20 play. I did a Roblox May 20 call. It was for 40 bucks. Their earnings was bad. They didn't end up moving too much, which was good. They popped and dropped and dropped and popped, and then they're staying neutral. But I said that call was just way too cheap. We were paying like $1,000 for that not too long ago. So I grabbed it. I thought it'd be a good earnings gamble. We'll see what happens. Well, no, it's already clapped, but who knows? If anything ends up bullish, I mean, let's see how the market feels. Tepper, everybody in between, but those are the only plays. And now finally, I will be looking at oil. I'm down about like $3,500 or $3,600 on that future there that we made at the end of last week. But now this is where it gets interesting. There was a report that came out that you finally saw the first net sales on commodities in 18 months. Pretty much somebody is selling commodities right now, and they're doing it in unison, and people are getting a little bit worried. But essentially, if we do get a hard landing and the commodities come down, I mean, maybe it may not be good. So we're going to see little long term, but keep your eye out for that. Otherwise, what I'm trying to say, I think oil and commodities are going to be interesting. Only other thing besides value and like solid dividend names and consumer staples, you saw the rotation yesterday. Didn't happen today, but definitely watch out for that. And then maybe the banks, but we'll see. I'm kind of waning a little bit away from them until we get into Powell, but that's pretty much it. I hope it helps. I hope you have a wonderful day. And, well, yeah, that's it. That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to chase the cloud. When you get the little cloud, I hope when your cloud comes your way, you're not like, it's too small. No, you got to run for it, baby. So, again, are you going to be pushed to quit or be pushed to greatness, baby? But it's the Chad, and I'll see you in the morning, and God bless you. It's game time, baby. Let's go. We got a couple more months. Let's finish it off strong. Let's at least make it through this summer. And God bless you. Have a good night. Drink water.